Yo, this is Omar. I'm back. So I haven't posted a video in a long time. So we're just gonna, start everything off right. So this is actually a trade that I'm looking at. Let's go ahead and make the screen bigger and go ahead and explain why I actually have a limit order set up here. So this is NAS100. As you see, we have been very bullish. We broke out of that bearish momentum that we had. And structurally we're looking bullish on the daily, but you go to the weekly and stuff like that, you see there's still a lot of bears in the market. So I do have a short-term direction going down. So we're gonna go ahead and see why the limit is set. So I have a H12 order block over here, and notice how price came back and just rejected off of it very sharply. Now what it did is also fill in that remaining imbalance that we had over here, and I can draw that if you guys can't see it. So it closed at an efficiency and actually went all the way over there. Yeah, let me close this. Alright, so now I went down to H1, and this is the close of the H12 order block. So we just rejected it, and what I normally do is wait for a propulsion block to form, which if you don't know what a propulsion block is, it's just an order block within an order block. Think about it that way. So let's say you have an order block over here, price comes in and rejects it, then on the lower time frame it could look something very similar to this. Comes into your order block, moves away from it, and leaves another order block within it, and then goes in the intended direction. So this would be the lower time frame. It would reject that higher time frame order block, leave it, and then also have another order block that forms here. So that other order block would be called a ICT propulsion block. So that's what I have over here noted by PB. So this is very common. I like to wait for a break of structure or a change of character to occur before I actually just take a trade, because you can't just see a random order block and then set a limit order just based off of that. You can if you have a lot of reasons for doing so, but personally I'm not the type of person to do that. I just sit back and wait for price to do what I'm expecting. If it doesn't do it, then there's no loss there. So came in, rejected the order block, left behind a propulsion block. So I have a limit order set over here, TP over here, which is just a H4 order block down here. Now yes, price can go a lot lower, but this is just going to be a TP, because regardless I do expect price to have some sort of reaction off of here, and it's not worth risking all of my profits to potentially get a steep retracement all the way back towards my entry. So that just it wouldn't be worth it anymore. And sorry, my visibility is off for some reason today. Alright, but yeah, that's the setup. It's really that simple. So normally my propulsion blocks would be on a lower time frame. So let's say I'm using this would be a good example here. So this is the H1 order block, price came in, rejected off of it, then I'd be down on M1 waiting for the propulsion block to form, which this would be the propulsion block right here. So price came back, rejected off of it, and then proceeded to go up. So I 9 times out of 10 always wait for the propulsion block, if not 10 times out of 10, if not 10 out of 10 times. But yeah, we also have the imbalance here. So there's a lot of incentive with the way I trade, that I believe price is actually going to go up a little bit more. Go up a little bit more, grab this, and then proceed to go down towards the intended direction. And that's what we're waiting for. And like I said, it doesn't if it doesn't happen, then I'm just chilling, honestly, because I've taken this setup numerous amount of times. So that's just what we're going to be waiting for. I hope this breakdown made sense, and I'm gonna upload a follow-up once the limit gets hit, or if my trade becomes invalidated. So if price goes down a certain amount, like if it were to hit my TP, before I'm actually in the trade, or if it were to go down all the way down here and grab this liquidity, then my limit order most likely is going to be removed, because at that point, you know, the take profit has little to no validity. Think about it. I'm targeting this because it's a level of inefficiency, you know, on the market's end. So if this inefficiency gets cleared, my trade is invalid because I can't target down here anymore, because, you know, there's nothing else over here. So yep, that's, you know, that's the way I think. And I would like to take price a lot lower, but, you know, it all depends, because on the way down I will be getting in multiple positions if I am given the opportunity to do so. So that's what I'm going to be looking for. So I'd be looking for something like this, you know, to just be in multiple trades on the way down. But yeah, time will tell for sure, and hope this breakdown made sense. And yeah, let me know if you have any questions after the video, just because, you know, there's going to be a second part where I will go over everything once more. And yeah, see you guys in a bit. Oh, I also did forget to mention that news actually just dropped. It was the ADP numbers. The forecast was 455,000, and, you know, the actual number is 455,000. So you do see this going down a little bit, because actual greater than, if the actual number is greater than the forecast, then that brings the dollar up, and the dollar going up results in stocks and equities going down, often even bonds. So yeah, that would explain the move down that we had. If the news didn't drop, I do believe that, you know, price would have most likely been able to tap me in sooner, but, you know, it's all just going to be a waiting game. So yep, hope that made sense, and see you guys in the follow-up. Hey, welcome back. Hope my audio is not too bad, but yep, this is the follow-up. So it's currently 4:54 p.m. and it is, you know, Thursday, March 31st. So let's get right into this. Just drag you over here and boom. So we're just going to start off from the weekly perspective, and I'm going to make my way down just to explain to you guys once again, you know, why I got into the trade, and you guys are going to see how the trade played out. But yeah, I'm just going to do this because, you know, the first time I recorded like my entry, I was in a hurry, so it may have been a little hard to understand. But from the weekly perspective, you do see that we are really bearish. You know, there was imbalance left here that came back to fill it, and then price came over here, and it's almost at equilibrium, I believe. Sorry, it passed the equilibrium just a little bit above. So this does mean that we are in a premium market from this point to here. So, you know, ideally you'd want to buy at a discount and sell at a premium. So in this case here, we are at a premium market, and I can actually just show you guys this really quickly from US 30. It's just the same situation here. You know, you have your Fibonacci from here to here, and then the 50% is the equilibrium point, and anything below that is a discount, and above that is premium. This is just called, you know, the ICT premium discount array, PDA. So yeah, that was the weekly time frame. Now we're on the daily. So once again, I was looking at NAS, and I did see that it had a sharp reaction from this level here. So, you know, naturally I was like, what caused this? So I was going through all my time frames, and I did notice that there was a sorry, left the fib on here. I did notice that there was actually a H12 order block, the 12-hour, that I actually missed. Let's go ahead and draw this here. Boom. So notice how price did come over here and grab all the liquidity from the level and then proceed to go back down. And another thing that made this order block, you know, high probability order block, that's what we call it, is that it also had imbalance up here. So, you know, this was the initial imbalance over here, and then price got redelivered, and the imbalance got partially mitigated past the 50% point, and now this becomes the imbalance, because, you know, there is still that gap between these initial candles here. So that is, you know, reason for market to go up. You know, it has incentive to grab the liquidity from the upside over here. So I'm actually going to delete the H12 order block just because I don't like the way it looks on the lower time frames. Like, I could hide it here, but I just, you know, liquidity's taken from it, so we're going to remove that for example's sake. And I'm going to move down here. So you guys will notice that my TP did change, and let me go ahead and explain why that happened. So initially, this was my target, the H4 order block, and you can see that it was hit, but I actually did notice that there was a better level over here on the H2. So this would have been my ideal TP, but I had a hard TP set here, so I moved the TP to this level here. So overall, the position did run to 5 times our risk, and you can see all the details here. And I'm gonna go ahead and show you guys this detail just because a lot of people don't. This is, you know, trade length. How long was I in the trade for? And all this stuff matters because you have to think about that. The trade itself wasn't closed out here, but over here on this candle. So that puts the trade length at 1 day and 3 hours. So that's 26 hours in this trade. And, you know, my trades, since this is going to be like my first video on this YouTube channel, my trades aren't normally that long. I'm not normally in a position for 26 days. It all depends on what's acting as the higher time frame. So in this event, the higher time frame was the 12 hours. So, you know, basing it off of that, I understood that this position is going to be a little longer than normal. And I'm always open to that. You know, I'm a day trader and I'm dynamic with it. If I need to get in and out fast, I can. If I want to hold for days, weeks, whatever, I can. And let's go ahead and show you one more example. So my normal trades, let's say the higher time frame is H1, then you'd see me go down to M1 or the second charts or M5 even at times, and you'll notice that I would get in. Let's just call an entry here, stop loss somewhere over here, and this is just to show you guys what my normal trades look like. And this trade length from here to here would have been, you know, 31 minutes. So this is just to give you guys an idea that not all of my positions are 26 hours long, but I just wanted to give that detail because a lot of people see like for instance on my Instagram I do post all this stuff. So like I show you guys my projections. Let me get a separate page pulled up on my other monitor. I show you guys my projections. I show you guys, you know, how my trade works, but a lot of people aren't very open to, you know, how long the trade actually takes to play out, and that's a very big thing. So this is my Instagram. My personal is, you know, King Omar D, but this is the account where I post all my educational stuff pretty much. So you would see a trade like this and not have an idea on how long the projection actually took. So what I started doing lately is, you know, incorporating total trade duration of 26 hours because this information is important, because if I didn't show you guys what time frame I'm on, you could easily think that, you know, Omar got in a trade and he was out within 5 minutes, but that's not always the case. So I do plan on being transparent in that regard as well. And one more thing, just to make sure everyone understands this, I do call this a propulsion block, and the explanation is over here. So since, you know, this is going to be an educational channel, I'm going to go ahead and break down propulsion blocks. And if I do need to make a video dedicated just to propulsion blocks, then I will. But this is the concept of the ICT propulsion block here. So this is a higher time frame, right? For example's sake, and let me just put it on here for some of you guys, HTF, higher time frame. And we're gonna have something over here called LTF for lower time frame. So higher time frame comes over here, there's an order block, grabs the liquidity from it, goes to the upside. Now what you will see me do in a lot of instances is wait for a propulsion block to form, then I go. So let's say this was the higher time frame order block here, reacted off of it, price left. On the lower time frames though, that's the cool thing, you can often see that, let's see this here, actually let's use this one just so I can put the name on it, PB, and we're going to name this order block. And all these things can get like dedicated videos if anyone's still confused, but it leaves an order block right on the higher time frame, leaves it, and the price comes back to grab the liquidity from an order block formed within an order block. This is the concept of, you know, the ICT propulsion block. Just think about it, right? These are all order blocks within order blocks. So price grabs the liquidity from this order block, goes up. Guess what? There's an order block within this order block, grabs it, and just so on and so forth. So normally you'd see it on the lower time frame, and you can see it on any time frame. You know, the market's fractal, but in this case, my propulsion block was on H1 when the initial order block was on H12. So I did feel the need to clarify that. And what else was there? There was the propulsion block, and Yeah, so a lot of the time you will see a propulsion block left behind. Sorry, I don't have a tablet here, but you will see a propulsion block left behind. But I do need to explain that this does not always happen, and I'm completely open to it. Now, me waiting for a propulsion block is just for me to get a safer, and I have like air quotes right now, you obviously can't see it, but it's for me to get a safer entry in that regard. Why? If I were to see an initial order block, and let me go ahead and actually break this down, because this is a good way to put it, and I hope the video doesn't end up being too long, but if it is, hopefully it's informative. So, my trade here, I risked 42.76 points, correct? Now, say I wanted to just take the trade based off of this, right? 12 hours, just based off of this order block. Now, stop loss would have been 126.79 points. So once again, what you often see me do is wait for the propulsion block to form, which would 9 times out of 10 really give you a more manageable stop loss. It's the same concept here. So say I wanted to get in just based off the higher time frame order block, I'd be risking 44 points, which isn't bad, but oftentimes, you know, you'll see me go, sorry, I don't know how to use the brush too much. You'll see me go down just to be able to use the propulsion block as a basis point for the trade. So let's say this propulsion block here, you know, I'd rather have my stop loss be tighter. So in this event here, it will be 26 points versus the initial order block. Makes it look like I'm in kindergarten, but then the initial order block, which would have initially been 92 points. So I hope this makes sense. It's just a way for me to get a, you know, a better stop loss, and a better stop loss equals better risk to reward. So all this stuff comes with precision, but from my experience, let's say there's maybe a 70% chance that price does come back to the propulsion block. So I just wanted to mention that to you guys, because it's not like it always happens. And here's the thing, I'm open to it not coming back to it. That just means that, you know, I just won't be in the trade, and it's not the end of the day. There's a new opportunity every day. And yeah, by the way, it's Thursday and this is my only trade of the week so far. But yeah, so it went into the H12 order block over there, came back, had a change of character, also known as an internal break of structure, because as you see here, these were relatively equal highs, so a higher high was not made to validate this as a structural level. So this became internal structure. Now it changed character, which you can see over here, and left behind a propulsion block. Once again, this is a propulsion block because it's an order block within an order block. This is an ICT concept. Now, leaving that propulsion behind, it also had an institutional imbalance, also known as the fair value gap, that I noticed. Now, as you can see here, the imbalance was actually re-delivered and switched to be this level here, which you guys see denoted over here by my dotted lines. Now, price was in there, and I initially had a limit order set over here, but I was actively looking at my screen, so I removed the limit order, and I actually used market execution for this specific entry. So we're gonna play this on H1 so we don't sit here all day. And yeah, it would have hit the limit, but once again the limit was deleted. So my true entry was actually somewhere down here. Now, this is probably going to be one of my sloppiest entries because it was market execution once again. And I was in drawdown for a little bit, but honestly, you know, none of you guys should really mind drawdown. Drawdowns, you know, it's a part of the game. It happens. It just doesn't matter. So price did get close to my stop loss here by exactly 8 points. But that's whatever. So as you see here, price broke down, and I believe it fell down to 100 points. Now, let's go ahead and measure this. Yeah, 101 point. And at this point, as you see here, I had sell side liquidity. And this is just me going into trend management, because a lot of people don't know to show this stuff. So I just want to make sure we understand each other from that regard. So oftentimes you will see me move my stop loss to break even, but that doesn't always happen. So the general, you know, premise of this idea is that price came here, grabbed the liquidity below the sell side. So you can also think about this as we're going in depth in this video. Think about this as people leaving sell stops here, and people also leaving stop losses. Sorry, I don't know how to type. I'm gonna go ahead and replicate both of these. So think about it as there's a lot of sell stops and stop losses below this level here. So what the market often does is come down, raid it. So in this case, it was a 30-point raid. Grab all these orders and proceed to go up in the intended direction. So market comes down, grabs the orders and goes up. Now, what does this do? It acts as liquidity. It removes all these people's order, all the orders down here, and brings them up. So now they're gonna touch, they're gonna get stopped out of their order. If you have a sell stop here, chances are your stop loss is gonna be somewhere up here. So then all your stop losses would be taken, and then that just leaves the market to go in the intended direction. So now my stop loss, once again, sorry about that. Once again, my stop loss in this case would have been at break even. So I just want to explain this as well, because price did get close to, hitting my break even stop loss. But once again, that's the cost of being in a trade. It doesn't matter. It shouldn't, stress you out if you almost get stopped out. Because at this point, I actually did take a partial down here. Now, keep that in mind. I partialed first time down here in this range. Second partial was right over here. It was actually at the very, very, very bottom. I was surprised by that. And yeah, rest is history. During the Asian session, price did come all the way back up here to form that ideal structural level. I go to sleep really early. Had I been here, that would have been a perfect, entry to scale in again, but didn't happen, so it doesn't really matter. And once again, price comes down to this H2 order block over here, and it's not drawn, but I could just draw it real quick to show you guys what it looks like. And once more, this is a good order block because the market left behind very, very small imbalance. The imbalance is here. It may be a little hard to see, but ever so slightly, you see that very, very little gap there. So that just, reaffirms that there's more reason for the market to reach that level. And it hit it and kept going. And I did not actually have a hard TP set at this level, so my actual exit was on this candle. And that's what made the trade run, once again, 26 hours. And yeah, that's the breakdown. I hope it makes sense. And right now, price is in this H4 order block, so it's going to be interesting to see what happens here. Price could come up, grab the liquidity from this potential order block here, and then go down. But it is NFP tomorrow, so you need to be really, really open-minded on stuff like that to make sure that really, really volatile news can mess up your position. The market doesn't always flow. How can I explain this? News injects volatility in the market, so oftentimes you would see the market move a way that it normally doesn't move when news comes out, obviously. And yeah, that could be potential. Market could come over here, proceed to go back down, and if you do draw Fibonacci, it would actually be, I think, 62%. A little short of it. This is actually equilibrium, so that'd be pretty interesting to see. But yeah, I don't see a trade forming right now, and once again, this was my only trade of the week. And NFP, it's really whatever. I'm really indifferent to it. If I see an entry before the fact, then I'd probably get into it. But on Fridays, I don't really trade, and the same thing with Mondays. Sundays, you'll never really see me trade, but Tuesday, Wednesday, Thursday are my active days. Friday, you'll see me trade sometimes, but I prefer not to. If I do trade, it's normally before a certain time. And yeah, I hope this trade makes sense. And yeah, welcome to the channel. So if you have any questions, drop them down below. Or, once again, I showed my Instagram. Feel free to DM me over there, and I'll try to get all the questions answered. And if you want to see a specific video made on, a specific institutional concept, like if you want a video dedicated to order blocks, you want a video dedicated to market structure, propulsion blocks, change of characters, sell side liquidity, equal highs, premium discounted rate, anything vacuum blocks, just drop it down below. And yeah, this was the trade. Once again, 5 times the risk. And yeah, have a good day, and it's time for me to hit the gym. Hey, so this is post Omar. I'm just going through, go through the video and editing it, and I actually did end up taking one last trade. So currently it is, 10:57 a.m. Friday, April 1st. So now this trade, was taken literally right after I stopped recording. I wasn't able to, record the entry itself as I was, getting ready to go to bed, but I had a limit order set down here. So what I'm gonna do is break down this trade real quick. And yeah, so this is the type 1 setup. Now notice how I've been saying over and over in the video that I only take 1 or 2 types of setups. If I don't get it, then I'm not taking it. And I do sound like a broken record probably, but that is my learning style, so I make sure to be really repetitive in case anyone is having difficulty understanding me or anything like that. So once again, price did come down. I'm getting ready to clean my charts, but price did come down to this H4 order block that we had, right? Mitigated it, grabbed the liquidity from that area and left it. Now, knowing me and your understanding that you should have, after the end of the video, what do I wait for after an order block is grabbed? I wait for a ICT propulsion block to form. So this is what that was. Just called it an M1 propulsion block. Now, this formed. We had to change a character. Once again, I call this a change of character because a lower low was not made to validate this is a valid lower high. So then this became a change of character and this became a breaker structure. And it's gonna play price probably on the M5. It should be sooner. Alright, we just waited. So now market is just doing this thing, moving in waves, and it was at this point before bed that I realized, hey, there's a propulsion block down here. I went ahead and drew it, and I put the limit order here right before I fell asleep. Now I did actually get tapped in before I fell asleep, but I just turned off my phone because I don't want to stay up and monitor the trade itself. Now this thing did get its own video, the entry itself, but I don't really want to upload it as its own video, and we're just gonna try to make this quick so the video is not too long. But I wanted to mention that smart money does also get stop hunted. Like, it's not that there's one ideal way to trade. Anyone can go after your stops no matter how you trade. So that's why you'll notice a lot of people set like their stop losses right at the close of the order block, but I don't always do that. Now there is a minimum stop loss that I do adhere to. The stop loss in this specific trade was 15 points, as you see that over here. Now, for me personally, I'm not going to, risk 7 points on a trade. For me personally, keep in mind, it's just my trading plan, and I feel a lot more secure down here. Now, the projection I was going for is a 1 to 6.46, and let's go ahead and see how this played out. Now, the TP was not hit, but I just wanted to show you guys that, I still made money on this trade and the premise is still the same. So once again, let me just actually let this play out. Price happened here, and in the recorded video I mentioned that you can see accumulation, manipulation, distribution, and that's what you're going to see play out over here. We had a range, price came down and removed the sell stops and the stop losses below the range, because notice how a lot of people are going to start to sell. It broke the range, start selling, and that's not the case. They were using liquidity to fuel us to the upside. And what I also did was add a position. Now this position did end up getting stopped out because it's NFP, and like I mentioned, I don't like to trade Fridays, but once again, this was a position from last night, so I just let it run, and NFP hit, and I just decided to close both my orders because once again, when the news hits, it doesn't always play structurally and stuff like that. You can't, ideally I'd rather not trade NFP, but this position was in there, so I wanted to show you guys. I did exit, and so the trade itself was probably like a 1 to 3, which is the minimum according to my trading plan that I go for. But yeah, that was a trade. Hope it made sense. The scaling was just an order block that formed, went in, and then price went up, and yeah, I believe that's it. And I hope all this makes sense. If you guys have any questions, feel free to reach out. If you guys have any constructive criticism, feel free to reach out. And yeah, if this video has helped you, let me know. Peace.